With 100 Lot Trader. I hope you're having a happy holiday. I want to talk quickly about Tesla. Today saw an eye-popping 8% gain in a single move on Tesla, and I've suddenly become incredibly bearish. What is that, you say, Alpha Dad? What kind of crazy, ridiculous trader are you? Well, Alpha Dad's the kind of trader that sees an 8% move on December 24th and doesn't believe that there are actual human beings sitting here buying Tesla all the way up to just shy of its all-time high in the exact place where someone was trying to sell it and overwhelmed the available liquidity in the space. For context, this isn't just sour grapes. I should full kimono this. I was short Tesla right around 440. I saw evidence that there was a battle going on, and I actually did make a small profit on a very tight leg, and then got coerced into re-entering, and I managed to exit, not with a very small loss, right around 430.60. And the tell on this were these wicks right here, these rejection wicks, right at the 50 percentile range of the 20-day price range. This is an inner circle trader principle that I use all the time. It's just a very convenient way to evaluate whether price is trading at a premium, a markup, or a discount. I like to buy at discount and sell at premium. This is all inner circle trader stuff. So anyway, I have encountered this phenomenon in the past in both directions, where this is an algorithmic signal is what it is. There's an algorithm that is delivering liquidity that cannot buy unless it is below this range, and I see this all the time. And this clued me in to the fact that this vertical V-shaped recovery, which is a hallmark of put selling, meant that the volatility move was not going to continue unfolding. Volatility was about to get sold pretty hard, and that is actually what we've seen across the market, but specifically on Tesla. And that's fine. I'm long QQQ. I'm enjoying the upward momentum of this move, but now I have flipped from bullish after a consolidation to straight up bearish, because I read this as market manipulation, market making liquidity runs to resolve an inefficiency. This is not real buying, and I have proof. Well, I don't have proof. I have evidence. I went out looking for a specific trade signature called the bullish risk reversal. I've mentioned it in other trades. It is the idea that you sell puts and buy calls using the credit of the put to finance the purchase of an out-of-the-money call. It is also the way you hedge a long equity position, it's the way you hedge a short equity position. Yes, it's the way you hedge a short equity position. Note that. To see if there was any evidence that bearish or a bullish risk reversal was being used as part of this upward momentum. I would expect, if this were the case, to be seeing short-dated options trading at unusual volumes. Did I see that? Sure did. Let's go to December 27th. Tesla's strike, which expires in just 3 days, one of which is, there's at least one that is, in fact, an exchange holiday. So what do I see? Right here, I have a bullish risk reversal with 33,221 puts sold at a price of $17.50 and 32,265 calls purchased at a price of 3 cents. How did I get these numbers? I just went and I looked at where Tesla started the day at 435. I used OptionStrat's very useful tool, which allows you to see the contract value of an option at a certain point in time. I just kind of rounded out. So I know that at around 4:35 this morning, assuming consistent implied volatility, these puts were worth $17.50. And these calls were worth 3 cents. So now, at the end of the day, they are worth, these puts are worth $4.10, and these calls are worth a stunning 85 cents, which, I mean, that's hundreds of percent gain on the purchase. So let's look at what this trade ends up looking like. That's what got me. What this trade ends up looking like on expiry, December 27th. That's $58 million in 91% chance of profit above 433. Anything in this range, 450, which is right about where Tesla closed, and it's going up last I checked. Yeah, it's moving up the market. So anything above 450, and this trade makes $58 million. If you're asking me, how did I get these numbers, the volume, it's because there's a dark print right here. I just took the volume traded versus what's actually left in open interest, and I got this number. I did the same right here. And this is just one trade. If you look, the same thing is happening. There's dark prints all over all of these. So this is actually an underestimate of how much money went through in artificial buying using short-dated options. There is no obligation to purchase any stock in Tesla in this trade unless it closes below 430. Do you see the manipulation here? These calls, by the way, yes, you need to understand this. If I didn't mention it before, the reason this causes markets to go up is because someone is short these calls, right? A market maker, in fact, is short these calls because someone had to provide the liquidity to fill these crazy orders. So someone bought these at 3 cents or sold these at 3 cents, and they are now riding up at 85 cents in value. And what a market maker has to do when they are net short is they have to go with the direction of the market. It's counterintuitive. If a market maker is net short puts, they must sell the underlying, because what they're doing is they're offsetting the risk of their infinite loss position. The opposite holds true when they are short calls. So this is the definition of short-term market manipulation, and it is written all over the December 27th strike. This is fake. This is a pump and dump. Full stop.